Hello my fellow freedom builders and welcome to the channel again. Yes, I know I am pumping videos out these days, but it is summer, there's not too much to do, so here is another video. It's about Nvidia, you know, the darling of the stock market, and my take on it is that Nvidia is going to go up in the future. Now that might be a bit opposite of what you find in the analysis sections. If for instance we're looking at Seeking Alpha here, we can see that the Seeking Alpha analysts are saying hold, their quant is saying hold, Wall Street is saying buy. We can see that the factor grades here, growth, profitability, momentum and revisions are very nice dark green. There's just the valuation that is an F. Now I want to challenge this F a bit today, but let's have a quick look at what the opinions are in the market. Well, there's a sell, Nvidia. How big do they want to be? Then there's a technical analyst here saying where Nvidia stock price will go next. There is a case against Nvidia stock. There is Nvidia valuation is stretched and resembles the tech bubble of early 2000s. And Nvidia a reality check sooner or later. Then there are also some holds and a buy and so on. But the latest, out of the latest 5, we have had 4 sells. Now, first of all, let me just say that trying to compare Nvidia to the tech bubble is, in my opinion, a bit wrong. Remember that the tech bubble actually ran for, what, 3 or 4 years? And everyone was saying every single month, now it's over, it can't grow anymore. And then it just went up 10% the month after. So saying that Nvidia, if we're looking at that, should be the same as the tech bubble, and yes, it has gone up by 280%, and I'm not saying that we are not going to see a retracement, but I'm saying that I think it will go up over the next 1 to 2 years. Now my reason for this is in here in my stock scanner. We can have a look at all the different ratios and all of that, but I won't. First of all, I'll have a quick look at the TPI chart. We can see that we are in a long, good green uptrend here. And looking at when it is retracing into an accumulation oversold period, we would have called it here in April at around 271. And we would have written it up at least up until here, where we started to get a red signal. We might even have held it here, but let's just say for the case of it, we would have sold it here. We would have made about 50%, and right now it's actually in a buy again. Now, will it keep going up? Let's have a quick look at the value chart. Now, this value chart basically just say what has the average PE, the average price earning, been over the last 10 years. That has been 48.4, meaning that the investors have been willing to pay $48 for every $1 on the bottom line. Now, if their estimates are holding through, they have some quite large estimates, some growth estimates for the future here. So if the estimates are holding through and the investors are willing to keep paying $48 or 48 in PE, then we could go from 424 and up above 500. Now, I have a little addition to that, because a good thing here, and when we open the platform up, you can start experimenting with that yourself. But it is interesting to see what trend the PE has, because for instance, over 10 years, the last 10 years average was a 48.41 in PE. But what about over the last 7 years? Well, that actually went up. What about the last 5 years? Went up again, the average. What about the last 3 years? It is now at 83. 2 years, 87. It seems like investors are willing to pay a higher and higher price earning. And you could say, oh yeah, well, 87, 88 in PE, that is completely overrated. But another thing you can have a look at is the so-called PEG ratio. In the PEG ratio, you're taking the price earning, this is a 12-month forecast, the price earning ratio divided by the expected growth, meaning that you get a number of how much are you paying for future growth. Because if you're paying a price earning at, let's say, 54, but the company is going to double in profit next year, then that actually equals half of this. So basically, the PEG ratio at 2 or below 2 is what I like. And this is 0.9, which is very, very good. So 0.9, good PEG ratio. And if we're looking at this, let's just take one like this here. Over the last 3 years, we've had a PE ratio of 83. We can even go a bit further down just to say we want to make it a bit more realistic and have it at 65. Now, if the price earning drops to 65, meaning that the investors are a bit risk averse and they want to pay a lower PE. That could be some uncertainty in the market or something like that. So if the PE drops to 65 and the Nvidia estimates are coming through, then we could see, and this is completely theoretical, but it's a good picture, it's a good visualization of the potential here. Then we could see over the next couple of years here, the stock going from around 420 and up in the around 700 range. If the PE will stick at around 80, 85, we could actually see it go up to 840, 50, maybe 900, which means that Nvidia over the next 2 to 3 years could double in price. That is the name of this video, and I don't think this is pure speculation. Of course, something can happen. The estimates can break completely down and turn out to be completely wrong. Or there could be some sort of crisis in the market where the investors are only willing to pay 30 in price earning, for instance. But if you believe that the entire AI thing is still growing, if you believe that we are coming into an area where interest rates might not be high, but maybe actually be going down a bit, and if you don't think that some sort of potential recession will affect a company like Nvidia with their focus on AI too much, then a target somewhere between 600 and 900 over the next 2 to 3 years is absolutely not completely out of the window, I think. So that is where my claim comes from, that Nvidia could double in price. Will they double in price? I have absolutely no idea, but no one really knows. And the people claiming in here that it is just as a tech bubble, or that a reality check will come sooner or later or whatever, well, they could just as easily be wrong. This is my argument. I hope you found it inspirational and educational, and as always, feel free to leave your comment below. Take care of yourself and your money out there, and I'll talk to you again shortly. Bye for now.